For more, we are joined now in a CNBC exclusive, by the way, with Starbucks CEO Kevin Johnson. Kevin, welcome back to the show.
Good morning, Jim.
All right, Kevin, what do we do here? We got an unbelievable business in China that I want to own. Frankly, I like Yum China. I just want to own it. And then we got this very big cash flow generating business all over the rest of the world. Why not, with this many stores, separate China, give us a chance to own that? You know that you can move the stock up dramatically and give us the rest of the world, which is fine. Give us a dividend play and give us a growth play.
Well, Jim, you're right. We have a huge opportunity ahead in China, and certainly this last quarter represented that. 30% growth in China, and that was before the acquisition of the East China joint venture, which just closed at the end of last quarter. So the opening of the Shanghai Roastery also punctuated how strong of a position we have in China. So China clearly is the long-term growth opportunity and a place where we're deploying capital and growing. Now, certainly a lot of the capital we're deploying, the way that we're generating cash from other parts of our business around the world is part of what's helping us fuel that investment in China, both in terms of the innovation that we do around the design of our stores and the roastery, the innovation around food and beverage, and the innovation around digital. All of that is helping us drive our two big growth engines, the U.S. and China.
All right, well, Kevin, U.S. missed a bit, and some of it was the drinks you had, and some of it was the mall. Some of it was some progression during the quarter. What gets it back? Because I know that your fine company can do 3-4. That's not even an issue. You know, because it's done it before. What has to happen in the day part? What has to happen in the physical part of the store? Because throughput looks like it's been solved to get 3-4.
Yeah, certainly if you look at our Americas business that's led by the U.S., we grew 7% year on year this quarter. And the U.S. had a 2% growth in same-store comparables. And so certainly when you dissect that, the work that we've done around throughput at peak is paying off. Throughput at peak has had a third consecutive quarter of growth, strong performance, and more runway for us to grow with our core customers in that peak day part. Digital's been phenomenal. We grew the number of active rewards members 11% year on year to 14.2 million. Those reward members' average spend is up, so digital is strong. Our food attach this last quarter was at a record and drove 2 points of comp. So the one place that we were weak in the U.S. was really related to the holiday merchandise that we sell in the lobbies of our stores. That cost us about 1 point of comp. The opportunity for us, really, when you look at this is to continue to drive that morning day part, and for us to now transform the way that we're engaging with what I'll call the occasional Starbucks customers, who we're going to create a digital connection with, and then also retool the way we create that experience for them in the afternoons, the same way we did it in the morning day part for throughput at peak. That's the opportunity in the U.S.
Hey, Kevin, it's Carl. I mean, to Jim's point, I mean, the macro backdrop is working for you. Has anything changed about Starbucks and its leverage to things like employment or consumer spending or consumer sentiment?
Well, you know, the one thing I'd say, Carl, is our brand remains very strong. You know, we were just named, I think, the 4th or 5th most admired company, and the brand is strong with the consumer. I think certainly when we look at the macro trends related to away from home food and beverage, that entire industry in the U.S. is still a bit flat. But, you know, we'll see what the result is of tax reform, if some of those dollars start to trickle out to create more discretionary income for people to spend money on away from home food and beverage. But we feel very good about the brand, very good about how we're executing. You know, certainly this last quarter, the holiday merchandise that we had did not perform up to our expectation, but that's a holiday merchandise related issue. It's not anything to do with the core execution of the company. You then combine that with what we're doing in China, and we have line of sight to how we're going to drive shareholder value over the next few years here with these twin growth engines.
You do. All right, you know, Mr. Johnson, taking nothing away from the growth factors you're discussing, the bear case, which I'd love you to respond to, says more or less, listen, there are no clear drivers, given what we're looking at this quarter, to suggest that trends will accelerate. You're facing new specialty concepts, some competitors. You're facing value pricing from others, such as McDonald's or Dunkin' Donuts. And the business is clearly mature in its life cycle. How do you respond to those who would question your optimism?
Well, David, first of all, I think those are all points that someone would make about the U.S. market. And I think certainly you would probably agree that China is a separate, huge growth opportunity for Starbucks. So let me just stay in the U.S. We've always had competition in the U.S., and we measure this. We have data that informs us of what happens when a competitor builds a store in a micro trading area. And the fact is, this last quarter, if you look at same store and new store transaction growth, we grew customer occasions by 5%. And at our scale, growing customer occasions by 5%, I think you triangulate that with what's happening in food and beverage, we are gaining share. And so, I think you look and say at some point as markets continue to turn and we continue to gain share and build this brand in the U.S. and around the world, I think there's still a lot of potential in the U.S. and there is an unlimited opportunity in China.
I got to pivot then. If you are gaining share, one must wonder whether people in America either don't shop as much, aren't traffic, there's not enough traffic, whether it be the mall or actually the street. Or is this a market where it's gotten so mature? I know you're a lot in tea, but so mature that even though you're gaining share, the pie is getting smaller.
Well, let me break those two pieces apart, Jim. First of all, when we all know that consumer retail behavior is changing. Even this holiday season, more purchases were done online. Online had another significant year of growth. Now, there's still people in malls, certainly, but if we looked at our mall stores this last holiday season, we saw negative comp growth in those mall stores, which is an indication of less traffic in the malls. Now, fortunately for us, less than 6% of our stores are mall-based stores, so the vast majority of our portfolio is not mall-based. But that's an indicator that says consumer traffic patterns are changing. Then you separate that and say, well, does that mean there's less growth potential? We don't believe there is. In fact, that's why we continue to build new stores in the U.S. And if you look at where we're building the new stores, much of those are throughout Middle America and down into Southern California, and a high percentage of those stores are drive-throughs. And when we open those stores are performing at higher AUVs than prior generations. So that just tells us there's more demand in America, and you just have to be smart about where you're building stores, and you have to be smart about the format of store you're building. And that's exactly what we're doing and how we're approaching it.
All right, well, if that mix shift would accelerate, then I know you'll come back to a 3-4. Now, Howard Schultz was on the call, and at one point he talked about the roasteries, 32,000 a day versus 32,000 a week. Obviously, there's just a tremendous amount of money being made by a roastery. One, can that make a difference just in terms of future? And two, what can blockchain do for Starbucks? And I know that may sound out of body, but I didn't bring it up. Howard brought it up.
Yeah, well, let's talk on the roastery. I think the statistic Howard mentioned was the average Starbucks store does $32,000 a week, and the roastery in Shanghai is doing double that, more than double that, in a day. And so, you do that math, and that's a significant amount of revenue. It's very high ticket, and we think we'll serve over 1 million customers a year out of that Shanghai roastery. So certainly we are getting the traffic, we're getting the ticket, we're getting the interest, and perhaps even more important than that, we are getting a halo around the brand. The innovation that we're doing in the roastery is making its way out to the design of some of our other stores. The innovation we're doing in food around Princi is an opportunity for growth. And certainly the innovation in food and beverage that comes from the roastery is key to how we're going to work to elevate the entire fleet of stores with the investments we're making in Starbucks Reserve.
Rep, I come back to that blockchain comment.
Blockchain.
Starbucks uniquely, can you focus on that for 1 sec? Because that's obviously, have a little coffee there. It's obviously a major focus for a lot of people.
Yeah, so here's the meta point. You look at where we were 5 years ago on payment and where we've come today. Today we are over 30% of our payment in the United States is done with the mobile phone. Over 40% is done with the phone and our stored value card with rewards. In China, over 60% of our tender comes from mobile payment. Now, 5 years ago, that didn't exist. So you look at that evolution. That is allowing us to now explore and test new things. And the first thing we're testing is a cashless store here in Seattle, just to see what the behaviors are of just using mobile and credit cards. What Howard talked about yesterday is just pointing out that payments and payment platforms are continuing to evolve. And he talked a bit about cryptocurrency and the importance of blockchain and enabling cryptocurrency to exist. And I think, we are an innovator, and we're going to constantly look at a wide range of things that we can do and that we have unique assets that we can play a role in. Now, there's no specific project or investment going into this, but I think Howard rightfully states that, in a dynamic, evolving world, we're going to stay fully aware of all the opportunities that we have to participate and to participate in a way that creates value for our shareholders. And I think payments is a vehicle that we think is an important one to stay focused on.
Excellent. Thank you so much, Kevin. Kevin Johnson, President and CEO of Starbucks. Great to talk to you, sir.
Thanks, guys.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.